Starting with the energy space, the crude prices have gained for a second straight session today, with Brent crude rising above $103 per barrel due to concerns about supply disruptions in the Middle East and Africa and slightly improved economic outlook as well. You also have seen the gold prices trading up for the third straight session as investors buy at lower levels, but the buying interest remains sluggish with the downward bias still intact in for the prices, but on your screens more than 0.25% on the higher side. Let's keep it with the precious metal space and let's go across to Sunil Kashyap. He's MD at Scotia Bank and he joins us in from Hong Kong. Sunil, hi, welcome to the show. The gold prices have put their weakest quarter in as many as 9 decades, losing more than 20% in the previous quarter. We even saw $1,200 mark crack on the lower side. How have you read the decline?
Well, generally by the information available in the market, what's been happening is there is a sort of a sell-off taking place, especially from large-scale investors. Some fund managers, followed by some private investors, have sold off, and that's seen in the fact that the ETF numbers have come off considerably, and that's obviously led to this sudden decline in gold prices.
Sunil, while there are concerns of US Fed tapering of quantitative easing, but Japan and China are expected to continue with their stimulus, do you see the money flowing into gold on these lower levels?
What we're seeing is definitely in terms of Asia, there is still strong interest in gold. So there's more disposable income, so people want to buy physical gold especially. I guess what's happening right now is some of the investors who had invested for short term or who had money on the sidelines and they wanted to put it in gold are now rotating out of gold and getting back into the conventional assets like equities, etc. So while that's happening, physical demand in Asia remains quite strong.
The cost of production is a big range between $900 to $1,300 an ounce, depending on country and age of mine as well. What's your sense on where are the most producers good with the current prices?
Well, obviously, for producers, the higher the gold price, the better. But most of the production costs have been going up over the last few years. And to determine the exact US dollar cost of production, you have to also factor in exchange rates. So what you can see is recently, while the gold price has come off, the currencies for the large producing countries, for example, South Africa or Australia, have weakened considerably. So in dollar cost, their cost has come down. So I think, broadly, up to $1,000 per ounce at the current exchange rates should be something which will ensure that the producers continue with current levels. Some marginal producers may close down, but there would be no substantive impact in terms of production till we reach that level.
Sunil, where do you see support coming in for gold prices, and where do you see gold in 1 to 3 years time period from here?
Well, right now, in terms of where in the market there is support, there is strong physical demand. Refineries are quite busy, and so the consumption of physical gold in terms of either investors or jewelry remains quite strong. At lower levels, it may even go up a bit. So that provides the support. To read it 1 or 3 years down the road is difficult because gold is impacted so much by other factors, other economic factors. So I think it's a little bit dangerous trying to project that much far ahead.
All right, Sunil, we'll let you add that. But what, according to you, is a better way of holding gold then?
Well, for investors in Asia, they have different options. Increasingly, you've got gold ETFs which are offered. I think there's about 15 gold ETFs offered in India. There are some gold ETFs that will be launched in China soon. So some of the most sophisticated investors can invest in gold through the ETF route. But besides that, you do have housewives buying gold in the form of jewelry, and then you've got other investors, maybe some unsophisticated rural investors buying physical gold bars. So the range of investment opportunities available really depend upon the kind of investor appetite or what the investor is comfortable with.
Sunil, till last year, the portfolio of gold was advised up to 10 to 20% on the higher side as well. With current decline, what is your reading or what is your advice on that?
Well, I think generally, the percentage of gold to be held in a portfolio has been considered a suitable one, has been considered between 5 and 10%. I don't see any reason to change that. Gold is basically a diversification asset, and so keeping 5 to 10% of your portfolio in gold would be a sort of long-term goal for most investors.
Sunil, last question before we let you go. And the Indian markets are battling their own currency calculations here. In Indian rupee terms, where do you see the gold prices headed?
Well, right now it's trading around 26,000 rupees per 10 grams. And obviously the gold price has not seen the decline we've seen in international markets to the same extent, because the rupee has weakened considerably to around 60 rupees to the US dollar right now. The real impact in terms of gold price is going to be where the currency goes. But one would suggest that at around 25,000 rupees per 10 grams, there is a good support level and there's good demand at that level.
Thank you, Sunil. Appreciate you taking time out for us. That's the view coming in from Scotia Bank on the kind of gold holdings that you should have, and mine production, and of course the cost of production features going into gold there. Let's also get in Naveen Mathur, who's the Associate Director, Currencies and Commodities, Angel, and also joining us is Vijay Bhamwani, who's author and CEO at BSPL India. Thank you, gentlemen, for coming in. Let's start with you first, Naveen. And what's your sense now coming in for the precious metal prices? The kind of rebound that we have seen in the markets in the last couple of 2 sessions, how are you reading it?
Thank you, Manish, and good evening. I think the markets are stabilizing at these levels of around 26,000. We did saw the markets crashing in India for sub 25,000 levels also last week. Now, I think I'm always kind of optimistic on gold prices because of the demand, as Sunil was pointing out. Let it be India, let it be China, the demand is very strong at these kind of low levels. And I think that would be a major factor to look out and to watch out for in terms of the consolidation of gold prices going here from. The second factor also is the currency factor. Although international markets have gone beyond $1,200 levels on the downside, but Indian markets still hold it at around 26,000 levels, and that's just because of the currency depreciation. And from the currency perspective, I think the rupee, although we have seen some kind of a stabilization in last 5 or 6 days after the reforms being announced on the gas pricing policy and everything by the government, overall the sentiment still remains bearish for the Indian rupee against the dollar, and the dollar will strengthen. One, because of the recovery in the markets there, or the economy there, and the second, someday or the other, the US would definitely start tapering off their asset buying program. So when it actually happens, we just saw the sentiments or the kind of a news getting into or discounted into the dollar index, but when actually it happens or starts to happen, we may see a further strength in the dollar index, and therefore in our view, we see that the rupee should continue to depreciate slightly from here onward, and 60 would be where 59 to 60 levels where the rupee should somehow be trading in some foreseeable future. So overall, seeing the currency factor, Manisha, and at the same time the demand or maybe the lower prices, short covering, we are slightly bullish on gold. And but intraday also, I think if you are looking forward for trading activity on a day, still a buying position would be recommended for the month of August on gold on MCX at around 26,000 to between 26,050 levels. Stop loss for this trade we would recommend at around 25,850, and targets on the upside in the range of 26,300 to 26,350.
Vijay, what's your sense coming in for gold prices? And well, it's not just gold which has rebounded today, but you saw some gold stocks, equities also rebounded into the market, especially Titan. On gold and Titan, what's your view going forward now?
Manisha, we are seeing gold trading above 26,000 levels, which for gold bulls is short-term positive. Although whether it will stay above this threshold, and if it does stay above this threshold, will it actually make some sizable gains? That looks a little dicey because much of the volatility is coming in from the weakness in the INR. We've seen the rupee weaken on a closing basis yet again, and any kind of attempt by the INR bulls to strengthen the rupee is proving to be abortive in the short term. So if you do see the rupee weakening further from here, maybe gold will possibly go up by 250, 300 rupees, in which case you are likely to see a relief rally in the stock of Titan also, because there could be short covering which would raise the prices. As of today, we've seen a price rise of almost 2.5% in Titan. I don't really rule out another % or two in terms of appreciation in Titan to maybe 238 to 240 odd levels if gold remains buoyant during the session in the equity markets. So around 240, I think Titan will start seeing some amount of money being taken off the table in terms of short-term traders booking profits.
So closely correlated with the gold prices. With the gold prices going up, Titan stock also is expected to climb up in the coming few sessions. Let's talk about energy now, and there has been $98 back on your screens in case of the NYMEX crude prices. Naveen, what's your sense now coming in for this space?
I think, Manisha, the economic perspective looks positive for crude. The U.S. economy is modestly recovering. We are not seeing kind of a 3%, 3.5% GDP figures which we saw pre-crisis level in 2006 and 2007 for the U.S. economy. But at the same time, we are seeing some levels of around 2% or so. The unemployment figures are, I think, at around 7.5%. They're not moving above, but all the reasons of moving down has been embedded into the prices of crude. Even the German data and the Spanish data which came up today was also positive from the Eurozone. Except for the negatives in the emerging market economies, I think overall crude should be within the range of $95 to $100, as I keep saying, and it will be that particular close range of $5 in near term where it will gonna trade on. But I think 98, 99 kind of a dollars we'll see the prices to stabilize at, and even the discount and the premium figures versus the Brent crude is declining. We are seeing around $4, $5 levels of difference, which was a year earlier was approximately $27, $28 level. So overall, I think with the discounts coming up in terms of the WTI and the Brent crude, it is favorable for the WTI contract. And because of the economic factors, we feel the markets would be bullish for some time, but $100 would be a crucial level for the WTI to break off. We did saw it happening in February 2007, and after that July in 2008 we did touch to $147 levels also. But I think $100 is something of a very, very psychological level to be breached out for the WTI in Indian markets because of the depreciation in rupee, and at the same time the decline in the inventory is expected today on the API market. So I think overall we are bullish for intraday, and therefore the strategy would be to buy the crude oil contract on the MCX for the month of August at around 5,820 to 830 levels. We would recommend the stop loss for this trade to be put in at around 5,760 and targets on the upside in the range of 5,910 to 5,920 levels.
Fair point. Let's talk about the base metals as well, and 7,000 continues to be a resistance onto that one, Vijay. We haven't seen a successful closing above that.
You're right, Manisha. We are seeing a pullback rally in industrial metals also, and I talked about the previous swing lows of May acting as a good support. Unless those levels are violated, I think base metals will basically try to have a creepy, crawly kind of a calibrated rally upwards. Now, aluminium, which is close to 108.5, can notch up gains of another rupee and a half in the next couple of trading sessions. Where copper is concerned, I think 419 to 422 band is where I would see it. 844 on the July futures of nickel. Lead, I think, has the potential to go up to 127, and as far as zinc is concerned, 112.5 is where I would expect some amount of profit-taking pressures emerging from here. Where the downsides are concerned, I think a 1% decline would be a buy opportunity, because the bulls will attempt to buy the dips rather than short the upthrust at this point in time.
All right, so buying opportunities coming in for most of the non-agro space there. But with that, Naveen, we'll let you go. Thank you so much for joining us with your set of strategies. Let's go for a short break then. When we come back, we'll talk about the agro markets where sugar and chana prices have declined today on back of weak domestic demand.
This show is presented by MCX.
The excitement is building up. Find out which expert will make the maximum amount of money on his portfolio. Our experts on the stock game this week are Vishal Malkan, Ashish Kapoor and Saumil Mehta. Catch the thrilling game of portfolio building on BNSN The Stock Game only on ET Now.
Brought to you by Aditya Birla Group, taking India to the world. Hitachi, inspire the next.
I want to be here. Come what may.
Guruji has made your hearts for you. क्यों करती है तू ऐसे?
It's fun. I dumped you because you are small. And I'm not talking about your cell phone here.
Welcome back. Let's talk about agro commodities now, where we've seen more losses than gains coming out today. Vijay, how would you look at the chana prices? Even as the MSP for 2013-14 has been put up, we have seen a new contract low coming in for chana.
Manisha, I'm not really ruffled by the declines. I talked about the September futures at 3,150 levels, and here they are. I think it's a buy opportunity, provided you're not looking for day trades. You basically will have to fund this position, probably even average at 3,075, if not 3,100 in the September future series. I think the close we get to the festive season, starting from Ganpati and Durga Puja, Dasera, etc., the prices of pulses will start to go up, starting with chana, and of course a relief rally in tandem will be seen in sugar also. So my guess is agri-commodities declining at this point in time in expectation of a bountiful monsoon. The financial futures markets are, I think, undervaluing a whole lot of agri-commodities, especially the farm month futures.
Just one quick word on the others as well, because the good monsoons, good progress of sowing is something that has taken the guar futures, soybean, turmeric, jeera, all of them actually have declined in the day today.
You're right, Manisha, but those declines are getting bought into. Straying off the list that you spoke about, I remember talking about potatoes a couple of days ago. Today it almost hit a circuit in the September futures series. So what you are seeing is savvy money coming in at lower levels and accumulating. Now, whether you're talking about spices, you're talking about grains, you're talking about edible oils, or even pulses, I would expect the agri-commodity space to give above market average returns as compared to energy, as compared to industrial metals, or definitely bullion. So I think smart money is moving in, and declines of 2–2.5% would be invitations to purchase.
Fair point. That's the view really coming in for all of those commodities.